We just published our fourth quarter result, and this is a good opportunity to look back at the achievements and results of the last year. Despite the challenging macro environment last year, we reached very good financial results in 2019. Fourth quarter clean CCS EBITDA was at $598 million, bringing the total for the year to $2.44 billion. This is higher than our increased guidance. As for the CapEx, the organic spending was at $2.1 billion, at the higher end of our forecasted range, including $800 million spent on a strategic project. Now let's have a look at the individual business lines. We continued the yearly double-digit growth in the consumer services business with an excellent contribution from the fourth quarter, where the year-on-year number was 30% higher than last year. This business also generated around $300 million free cash flow.
Upstream delivered very strong results in 2019, 111,000 barrel per day production for the full year. We've sustained our very competitive unit OPEX of $6.4, and we managed to deliver $700 million free cash flow for the full year in 2019. That is roughly $18 per every barrel that we have lifted. This number is somewhat lower as compared to 2018, but that was largely driven by materially lower oil and gas prices for the full year in 2019. The big highlight of 2019 that I would like to mention here as well is our acquisition of the Chevron stake in the ACG field in Azerbaijan, where we will, after the closing of the deal, become the third largest owner of one of the globally largest offshore oil fields in the world.
Downstream also reached important milestones in 2019, since we have made the final investment decision for our Rijeka refinery residue upgrade program. Also, our flagship strategic project, the Polyoil, is executing, and we are at 50% of the implementation, so the project is on track and on schedule. As to the financial results, we were affected by lower refinery and petrochemical margins, but the segment still generated almost $900 million EBITDA during the last year.
2020 will be an exciting but challenging year. With our unchanged midterm macro assumption, and with an assumed half-year contribution of the ACG asset, we expect the EBITDA generation at around $2.5 billion for the year. CapEx guidance, similarly for the last year, is in the $1.9–2.1 billion range, resulting again in expected free cash flow generation from the group. We expect continued growth and another record-breaking year in the consumer services business, with increased focus on the internal performance improvement and contribution from the non-fuel business.
In upstream, our biggest priority for 2020 will be the fast and successful closure and thereafter integration of the acquisition of the ACG offshore oil field in Azerbaijan. Besides that, we just have to do all over again what we are doing for the past years, and that is credibly delivering on our promises, extracting value from existing assets, and continuing to generate strong cash flow for the upstream division in 2020.
In 2020, Downstream will continue to execute our strategic projects, and also in a year's time, we shall be able to talk about our technological roadmap, targeting to achieve our 2030 strategical targets. And since we are convinced that sustainability and climate strategy will be one of the most important competitive areas for downstream companies, in 2020 that will be a very special focus area for ourselves. And we are planning to come out with tangible decarbonization ambitions this year. Thank you very much for your attention.